Hey, good morning. Let's go over today's trade plan. So in the notes for the overnight session, I mentioned that if ES starts to hold above 1953, we could see an upside move up to 56.5 and 57.5 to 60. And that idea played out in the overnight session where we got a breakout above and the market tagged that 57.5 to 60 area. And the first test of that zone attracted some responsive sellers, resulting in a rotation back down towards that 56.5 level. At this point, bigger picture, we know that the market is approaching some pretty decent resistance zones. This is basically, a 100% retracement almost on that strong breakdown move that we had. And, if sellers are going to step in, then this is really the ideal trade location where they can step in. And I think that, we do have to be careful on buying too high. Buying pullbacks has been working fine, but you saw even in yesterday's session where, the market put in a very decent retracement all the way down to the overnight low, and then it started, rallying back up. And then even as it went back up, it struggled at the resistance zones. It wasn't just a spike higher and, strong rally where it never looked back. There was a lot of back and forth price action, and, it took a lot of time for the market to go through those resistance zones on the way up. And, at this point, approaching that 100% retracement area and the open gap at 1965, naked VPOC 1965, that idea of the market struggling to go higher is still going to be in play. And it's important to understand that context because, it changes the way you execute your long setups, right? And at the same time, if you're getting a good short signal, then these are the areas where sellers can step in and be more aggressive. And, we can see a pullback down towards 51.5 to 53.5, potentially down towards 48 to 49. But the high odds target on the downside in the event of a failure at 59 quarter to 61 quarter or 63 to 65 would be a pullback down to 51.5 to 53.5. And perhaps yesterday's high around 54, 55. That's an area that is very valid and is high odds of being tested on the day time frame in the event of a failure at either of these zones. So, 59 quarter to 61 quarter is still an area where, sellers can be aggressive. The market has already put in a rotation at that zone, so we have to be a little bit more careful at the pre-market resistance zone. But, it's still a valid resistance spot, and, we can still fail right at pre-market resistance for a pullback lower. But at the same time, we do have to understand that the market has been quite strong on the way up, and, there has been some decent momentum on the buy side. It's just that now that we're approaching some of these stronger resistance areas, I think that, now the market is at a spot where that momentum could actually reverse, or at least short term, the upside momentum can definitely fade, and we can now start getting more of a two-sided market, at least on the day time frame. Bigger picture, if this market starts holding up really well, we might be looking at a push to new highs, right? Who knows? But in the short term and on the day time frame, these resistance zones are pretty decent spots to look for a short setup on first test, and then see if you can get a retracement back down towards 56.5 and perhaps down towards 51.5 to 53.5. And then, as we test initial support, if the internals are really solid and really positive, then that area can actually attract buyers yet again, and we can then balance above the 51.5 to 53.5 zone. But, buying 59 to 61 is risky because you have that overhead resistance at 63 to 65, and we're not scalpers, right? We're not looking to get 4 ticks or 6 ticks out of the market. If we're risking 2 points, we need to be able to get at least 3 to 4 points out of the trade, right? You have to get at least 1.5 times your risk, and that just means that you don't need a 80 to 90% win rate in order to do really well. So that's our style of trading. We go for at least 1.5 to 2R on every setup. And that's why even though short term the market might be going up 2 points, that's not enough to justify a long setup, right? the market needs to have at least usually 4 to 6 point potential in order to take that long trade. Otherwise, you simply step aside and you wait for some better trade location where you have good reward to risk. So, it's very important that if you're using a 2 to 3 point stop, that you have a 4 to 6 point target. And if you don't have that, then it's not a valid trade, and you simply step aside and let the market kind of just do whatever it wants until it gets to a point where the reward to risk is justified, whether on the long side or the short side. So, if we push higher into 63 to 65, that could be a potential short setup. We have a high volume node at 67.5 where there's potential for the upside to be capped at 67.5. So, as we approach those areas, they can provide some good short setups down towards 56.5, 51.5 to 53.5. So today we're going to be very defensive on the long side, and short setups on first test of resistance makes sense here. We're approaching some pretty decent resistance spots, 100% retracement of that entire breakdown. So this is a spot where if sellers are going to enter, then this is really the spot where they can be active. Now, at the same time, if we notice that the resistance zones are only resulting in a 1 or 2 point retracement, and then the buying just comes right back into the market, then we're not just going to blindly keep on shorting, every zone, or just blindly hold a short setup, even if the price action is telling us that the buyers are really strong here, right? So there is that element of reading the market in real time, because if these resistance zones are going to attract sellers the way we think that they should, then the price action should reflect that. Then every test of the zone should result in a 3 to 5 point retracement at least, and potentially even more. And if that doesn't happen, and you notice that the resistance zones are either getting sliced through or there's not much of a reaction, then it tells you something, right? It tells you that this buying is much stronger than anticipated, and that means you have to step aside. You have to manage your risk accordingly, perhaps take a break even out, right? Look for the next entry and manage your risk, because that's really what's going to sustain you over the long run. So, those are the main ideas heading into the day. Defensive on the long side, perhaps a little bit more aggressive on the short side here, because we are approaching some really good trade location for sellers to be active. We have several econ reports out this morning, so just be aware of the econ calendar. 7:30 a.m. Central PPI, 8:55 a.m. Central consumer sentiment. So just keep those econ reports in mind too, because right around the econ reports you can get some decent price fluctuations, and you just want to be either flat heading into a report, or you want to be in a position where you've already scaled out of your position and you've managed your risk where you can hold into the econ report. Otherwise, usually it's a pretty good idea to be flat going into the econ and then initiate a position once the short-term price fluctuations and some chop around the econ is out of the way. So those are the main ideas. Let's see, if sellers can be aggressive and be active at the resistance zones this morning, and we'll take it from there.